Hey, happy Saturday, everyone. Futures Brizio here. It's 12:15 p.m. on Saturday, December 7th. Hope everybody is doing great so far over the weekend here. I made this video last night on using sentiment, basically trading against the crowd. Um, and so you can go back and watch that. I did want to kind of revisit it briefly. I felt like some parts of that video were probably not clear. So this won't be a complete rehash, but hopefully a little bit more concise and just the reasoning behind this. So as always, before we get started, make sure you smash that like button, subscribe to the channel, and ring that bell notification so you get notified when I post new content. And of course, any questions or comments, feel free to leave them. Okay, I read and answer everything. So, okay, so let's kind of just briefly reset. So, as you all probably know, if you've been trading for any length of time, it is a well known statistic that 70 to 90% of retail traders lose money. Okay. And not just in Forex. Okay. It really doesn't matter. Any market, whether it's Forex or futures or stocks or whatever. That's just a fact. So naturally, if you know that going in, then what's one easy thing you could do to help improve your odds? Well, it would be to trade on the other side of where the retail crowd is. So you have this big crowd going in one direction. That's your retail traders, so the vast majority of them are losing money. So you want to go the other way. Now you can't just do that blindly, but it's a general rule of thumb. So, well, how do you know what that crowd direction is? Well, you have great websites that will show you that data. This is one of them. Now, again, I don't have any interest in this site. It's a completely free site. You don't even have to register to use it. It's a wide open site. And there are other ones. myfxbook.com has one. I think they call it Community Outlook or something. It's on their website on myfxbook. Many brokers have this type of data for their own clients. So Forex brokers, especially, there are a lot of the larger ones have a section of their website that will show you similar data. But of course, in the Forex market, since it's decentralized, if you're seeing that on a particular broker's website, just understand that's only their clients. Now, it's probably pretty indicative across all of them, but there's going to be some differences, obviously, because it's a different client mix from one broker to the next. These folks here, I did ask them this question a couple of years ago. And of course, they didn't tell me exactly, but they basically said they have an algorithm that goes out and finds all this data and consolidates it. So I imagine what they're doing is they're going out and pulling this data from multiple websites, and then whether they're averaging it out or what they're doing, I'm not sure. But this is just one website. And the reason why I like it is because it's very simple and easy to use, and you don't have to register, you don't have to do anything. You just go to the site and boom, you're there. So I want to just show you an example of why this does work often, not always, but often. So let's just pick one that's really extreme right now. Let's look at the CAD Swiss. Okay, so you can see right here. Actually, this is not a real great one here. So let's not do that one. Let's try to find another one here. How about let's try Euro Swiss? It's probably going to be about the same thing. Okay, well, we can use Euro Swiss. Well, I want to find one that kind of crosses over. I'm sorry, guys. I should have looked at this ahead of time. Let's try dollar CAD. Okay, yeah, let's use dollar CAD. Okay, so what do we see here? So there's basically in their graph here, there's two sections. Now, first of all, they're using daily charts. Okay, so each one of these candles is a day. Okay, so this is about 3 months of price data that you see here. And here's what they're showing. This pink reddish area are the percent of retail traders that are short the market, this pair, at any given point in time. You have time across the bottom axis here, and then you have the percentage on this vertical axis. This is the actual price of the instrument, which we don't care about, so we can ignore this. We're just looking at these percentages and time. Okay, so you can see what happens here. We have retail traders getting increasingly net short this market. You can see the pink area as we go forward in time gets deeper. It starts over here, gets deeper, 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 deeper. And at this point, as of right now, we're almost 80% of retail players are short this market. And you can see, you can put your cursor over any point on these graphs and you can see up here it'll change. So that's why I'm going over here to the most recent price action, and you can see up at the top there it says 78% short. So we have retail traders increasing their shorts over time here over the last 2.5, 3 months. But what has price done? Price has gone exactly the opposite. Okay, and this is a textbook example of what we mean by saying 70 to 90% of retail traders fail, and that they often trade in the opposite direction. And and I don't know why that happens. I don't know if it's because they're trying to, in this case, they're trying to, pick a top in this market, so they keep increasing their short positions, thinking every time price makes a new high, they try to pick a top and they increase their shorts, and the market just keeps moving on without them. Okay, and you can see, it has. Now, so there's a couple of ways you can do this. One way you could do it, which I think is risky, is that when you see a chart like this, whenever price goes from, in this case, the blue area into the red area, okay, where now it's crossing into where the retail traders are net short, then you start buying the market. And if the opposite was true, let's say price was coming down and it crosses from, a red area into a blue area, then you start selling the market. Okay, I don't necessarily think that's a great idea because, again, it could just be a corrective move. So what I like to do with this is I want to see the percentage this ratio up here be at least 60-40, one way or another, 60% long, 40% short, or vice versa, or higher, 60-40, 65-35, 70-30, you know what I'm saying. If it's anything less than 60% on either side, let's say it's 50-50, 55-45, to me that's a sideways market. It's pretty well balanced long and shorts, and probably the market's not necessarily strongly trending in one direction or the other. Okay, so yes, you could do it this way, where as soon as you see one of this crossover from one color into the next color, and in this case that would have worked out beautifully, but that doesn't always happen. So and the other thing is, in this case, it would have actually worked out for two reasons. One, because you can clearly see the price did go higher, but two, at the time when this crossed over, let's look at this candle right here. If we look over to the if we look up to the top here in the long shorts, even at this stage, retail traders were 66% short. So to me, that fits the criteria because, as I said a minute ago, I want at least 60% in that opposite direction. So if I'm looking to go long here, I want to see the shorts at least 60%, and it's at 66. So this actually would have been perfectly fine. But what you'll see a lot of times is that before that ratio gets big enough that you'll have that percentage more like in the 50s. So let's take something on my watch list. This gets back to what I was talking about last night. Let's look at the euro yen. That's one I had on my watch list. Okay, so you can see euro yen right now, as of the last candle, is at 50-50, split right down the middle. Okay. Now, so even though it's crossed from the red area into the blue, okay, I would not short this yet. Okay, remember, we're going opposite the crowd. So if the crowd is becoming increasingly net long, then we want to look for shorts. Now, yes, the market has been going down. Listen, we're just talking about this particular strategy, okay? So yes, people are going to say, well, you missed all of this in here, okay? Just put that aside. That's not what this trading method and this tool is for. I don't know if you can really call it a trading method, but it's a tool. Okay, so now we have price has now moved down into this, from this red area to this blue area, So now we're on the alert now for short positions because the retail traders are becoming increasingly net long. Okay, and you can see what's happening here. But right now, the sentiment is sitting right at 50%. So to me, that's not enough, okay? Because we could just have this market just start moving sideways. So what I want to see is, and look, guys, this can happen pretty quick. This can happen within a couple of trading days. Is we want to see this blue area start to grow, the shaded blue area start to rise up here and hit at least this 60% level. And then at that point, I'm interested to start looking for shorts in this market. Okay? Because at that point, now you start to have more of an extreme position where 60% of the retail traders are long. So therefore, price is probably going to continue to go down. Again, falling into that statistic that 70 to 90% of the time the retail traders are on the wrong side of the market. Okay? So this is an example where, yes, we have crossed over, and yes, you could absolutely start taking shorts in here just based on this and start looking for pullbacks and trade short. That's more aggressive. If you want to be a little bit more conservative about it and let the statistics play out in terms of the retail sentiment, then allow this blue shaded area in this case to rise up to hit at least the 60% level, and then you can start looking for shorts. Okay, so now again, guys, you can't use this in a vacuum. You still want to use your you still want to go to like the main euro yen chart on your platform and look at levels, make sure you're not trading into some selling into some major support level on a daily chart or anything like that. I mean, because we actually do kind of have that right here, right? You can see where price came down here. We had this big push down. We had this price bottom out here, and this is a daily chart again. But if you look to the left back here in September, we hit these lows again, then price bounced and went higher. Now, I'm not saying it's going to do that. I mean, this could just be what I like to call, and what's an old term, a dead cat bounce, where price, reacts off an area, comes up, and then rolls over and continues in the direction of the trend. But this is why I'm saying you want to wait and have this retail sentiment play out, which means it has to become more net long on this sentiment, up to at least 60% before you start looking for short positions. Okay, so if we go to euro yen, which I don't have up here, let me just find it really quick. Here's euro yen. Okay, and I'll just throw my template on here. Okay, so here's euro yen. We'll go to the daily chart, and you can see this is why I'm saying don't just jump into that just because it looks like it's going down, it's crossed over, because you can see we do have a support area that runs across here on the daily chart. You can see it all the way across. So I don't want to necessarily just jump into that, but at the same time, this is pretty bearish, right? From this high down to where we are now, we're certainly making lower highs and lower lows. Okay, but at the same time, again, if you're going to use this tool, use it the way it's intended to be used, which is to let these things play out and let the retail sentiment go. So until it's at one of those extremes. So this is one of those pairs that I would put on what I would call a watch list. I talked about this last night. The euro yen is one of those pairs that I'm going to be watching each day. Every time the daily candle closes, I'm going to come back here and I'm going to look, and I'm going to wait and as soon as I get up to around this 60% area, I'm going to start looking for shorts if that happens. Okay, if this continues just to move sideways or begins to go back the other way, then I'm not going to trade it. So again, there's a couple of ways you can do it. You can do it just when it crosses from one color area into the other area, which for this pair would have been as soon as we got this close right here, then you could start shorting, and you can see you would have had basically 2 solid trading days of it going in your direction. The first day it really didn't do anything on this little blue doji, but then the next 2 days it went down. Now we're bouncing again. Okay, and that's going to be pretty typical, right? You make a new low, you bounce, make a new low, bounce, make a new low, bounce, right? That's just typical trending market structure. All right, and for this, I'd say as long as we don't close back, if you're looking at market structure, we could be looking at this area up here or this area up here as kind of our structure areas to look at. But again, we're just using this tool as a contrarian signal to trade against the retail crowd. That's all this is intended to do. So this is a pair that I would look at on a watch list, as opposed to when I showed you, what was that one I looked at? Dollar CAD. That's been very actively trading in that setup. Okay. So I want to show you, and I covered this last night. This is one where this is dollar Swiss, where maybe this doesn't really work. Okay. And like I said, nothing's perfect. So you can see here, we have the retail crowd very net long here. Let's just start from back here. Very net long. Price is going up, up, up. And you can see the retail crowd is at about anywhere from 90, back when we started here, more than 90%, 92% long, even to this peak right here, still at 83% long, and the market was going up. Okay. So this is one where if you see this, where you have these really big areas that are already in existence, like up in here where it's the sentiment is very heavily bullish, and the price is continuing to go. This is one of those times where, the retail traders were essentially on the right side of the market. However, you should notice though that as price is going up, the retail sentiment is coming down. Okay, so because again, you have retail traders that are trying to pick tops, and are starting to increase their short position. So this pink area is growing, meaning that the shorts are starting to increase. Okay, so but we still are at a big extreme here. We are still going up. Okay, and so this is one that is not a good use of this indicator or this methodology, because we have an agreement. We have increasing price and we have a very large bullish sentiment. Okay, so I did want to point out that this isn't foolproof, and there's going to be pairs like this where you're going to scratch your head and say, well, this is an agreement. We have extreme bullish sentiment and we have price continuing to go up. Now, I don't know how long this is going to go. Are we starting to turn over down now, or is this just another pullback? We still are very extreme here. So, I don't know. We'll have to see. But this is an example that's not great. Okay. So in that case, I probably, so they have this, let's go back to that for a second. They have this showing as, because of this sentiment, you can see they have this little table up here. Because it's 81% long, they're showing this as a extreme bearish trading opportunity to go short, because the retail crowd is so net long. And that might be true. And if I turn on their little contrarian arrow indicators here, they are starting to show more of these red arrows pointing to downside. Now, I don't really like these arrows, because as you can see, all these arrows in here where they were saying go short, all these trades either would have been losers. I mean, look at these right here. Loser, loser, loser. These are all losing trades. That's why I don't like using these arrows. This is one thing that they're I don't know what they use to calculate these with. I don't like them, so I just turn them off. I just use the percentage and just use the color fields, and I don't bother with those arrows. Okay, so dollar Swiss is one where I would not probably use this at all. So, and then again, to revisit another one that's basically on my watch list is Aussie Kiwi. You can see right now it's at 54.46, so it's pretty well balanced right now. But if we go and look at the chart, this is one I'll definitely keep an eye on, because you can see what's happening here. Price is now, you can see it's choppy, but it's pretty well balanced right now. If we just look at recent price action, price is now broken down from the red area into the blue area, so it's starting to trend down, and the blue area is starting to grow. So again, as of the last update on this chart, it hasn't updated for Friday yet for yesterday's price action. This is still saying December 5th, which was Thursday. So I'm not sure when they update this. Maybe because of the weekend, they'll update it when the market opens again on Sunday. So the last update on this was Thursday, so I'm not sure how they're gonna how this will work out for Friday, but let's just take it for what we have. So if this blue area shading starts to rise and we can get up to at least 60%, at that point, I will be very actively, starting to look for shorts in this market. Okay. And that's basically the way I use this. So I wouldn't necessarily just trade this to the downside just because we've crossed from the red into the blue area, although maybe you could. If you look back here, we did have market structure breaks, right? We had this structure be, if you want to just look at, breaks of structure, we had this pullback that led to this high. Now we've taken that area out. These lows now have been taken out. So again, if you wanted to be more aggressive, you could just say, you know what, I'm willing to short this market right now just based on this, because we've crossed into this from the red to the blue area. We've taken out structure. We start trading it. But again, if you want to play this method based on using extreme sentiment, then you want to wait for this to get up to at least 60%, which is not far from there. I mean, as of Thursday, it was at 54. So, I mean, you can have one trading day to the downside and have this thing, depending where the retail traders are positioned, to have this thing start growing and going the other way. So we'll see what happens. So and then again, these are daily charts. You don't necessarily need to trade off these. You just, once you establish what direction you want to trade it in, then again, what I would do is go to my regular chart down to shorter time frames, 4 hour, 1 hour, 15-minute, whatever. Look for pullbacks and entries. Okay, just based on the regular price chart, and just wait for corrections on a shorter time frame. You don't have to trade off the daily chart. This is just using the daily chart just as the, to help you as a guide to which instruments you should be looking at. But again, you don't need to trade off this daily chart. And in fact, I wouldn't, because I want to get a more precise entry. I want to wait for pullbacks, and so I'm not going to do that on the daily chart. I'm going to go to a shorter time frame and look for areas of opportunity on shorter time frames. So yeah, so that's essentially it, guys. Again, very simple concept. 70 to 90% of retail traders are often on the wrong side of the market. This is a website that will show you graphically where price is as compared to where the retail sentiment is. And you will see they quite often diverge, although not always, as we saw in the dollar Swiss. They did not diverge. Now, again, they have this marked as highly bearish because of the extreme 81%. So they're showing this as extreme, but I don't really see that in the chart yet. So this is one I probably just would stay away from right now, me personally. Okay, I want to find ones where you can clearly see that divergence, where they cross over each other, where the price crosses the color area, and they're clearly going in the opposite directions. And or look for ones that you can put on a watch list, like what we just looked at with the Aussie Kiwi and the Euro Yen, where right now they're pretty well even, but it looks like maybe they're starting to turn and diverge away from each other. And those could be, better opportunities, earlier opportunities to get in on at the beginning of that divergence, rather than, jumping in midstream on, say, like on dollar CAD. So although there's nothing wrong with it, you certainly could keep trading dollar CAD to the upside. But see, this is what I'm talking about, the crossover divergence, right? A sharp decline here, a sharp increase in bearish sentiment right at the time when the candles cross each other. That's one way to do it. And like I said, this one is textbook perfect, because not only did we have this crossover, but at the time we also were 62% short. So we were well within that 60% or more guide to allow you to, take counter trend positions in this case, or not counter trend, counter sentiment positions, in this case long. Okay. So hopefully that's a little bit more clear. I'm going to end this here. We're still at almost 25 minutes. But I did want to revisit it again. And again, guys, any questions, drop them down below, like the video, share it, subscribe to the channel, and we'll update on this next week, as well as get back to our futures trading. But this is a nice way to have a pretty straightforward mechanical system in Forex that allows you to just, only have to look at these charts basically once a day and when the daily candle closes to look for opportunities. And then, like I said, it definitely puts the odds in your favor in terms of just, again, trading against the retail crowd sentiment, which is, as we know, the vast majority of the time is wrong. So, all right. So that's it, guys. Have a great weekend, and we'll talk to you next week. Thanks.